The nominal fiat gain numbers speak for themselves. Gold, silver, and platinum have all been performing well, especially since gold busted out of its old $2,000 an ounce resistance just under a couple years ago. Now, seen through the eyes of gold around the world, the story is almost the same. Up and to the right. Also for silver, nearly everywhere we look. Platinum has not been left behind this year either. As I suggested in last week's SD Bullion Market update, the nominal fiat Canadian dollar spot price per troy ounce of silver is breaking north and closed this week at a new all-time nominal record price high. The better news is the laggard fiat Swiss franc indicator is still flashing a coming nominal price doubling in time. None of this is stopping noted physical precious metals whales from taking to Twitter X and beating the drum on hard savings that are climbing in nominal price points of late. The physical fundamentals for silver, especially in solar and investment to come, is looking mini systems go time. New research from Europe shows just how much silver could be needed by the PV solar panel industry by 2030. And they have found that silver shortages may become more frequent. Quote, "The research quantifies the scale of the challenge and shows that it is an issue the industry will have to address without delay." Good luck. We need higher silver spot prices to come. News out of Bloomberg this week, illustrating London's silver inventories are again tight with high lease rates locally. Now, speculations over the underlying mechanics in the silver market remains high, of course. Nothing new there. Same old, nearly opaque silver market. We're going to do a whirlwind tour around both Western and Eastern market coverages on the ongoing bullion bull market. We begin with stonk cheerleaders typically found on CNBC in the USA.
Number one, why do you think that gold and silver, boring old, expensive to hold metals, are doing so well?
Well, I mean, I think gold is in a multi-year trend of de-dollarization where the demand for gold and gold holdings by foreign central banks now are above that of U.S. Treasuries. So that's just part of a long-term trend. I think what's really exciting over the last month or so has been the re-rating, of gold mining companies.
Dramatic, and the overall momentum, I think, is going to continue up until certainly December 31. And there's a lot of reasons for that. And I think that you've got to say 38.50 has got to be a headline, and then probably 4,000. I noticed Goldman's is saying possibly even up to 5,000. So look, it's a runaway train at the moment. Don't stand in the front of it because it'll run you over. It's a bull market.
Oh, well, absolutely. That is very well said. Peter, at these current levels, the understanding really is that there are very less sellers into the market. People are still buying at these levels. So what are we really looking at? Many, many years of bullishness continuing? Because this can't be a short-term trend.
Absolutely. I think that's the key, Manisha. I mean, the shorts, no one's short. No one I talk to is short. No one... as far as, trading's a different matter. If you were short-term trading and you're looking at a pullback and it goes down 30 or 40 bucks, that's what a short-term trading is. But the overall momentum is certainly very bullish from here, and that will continue with, central bank buying, retail sales. As far as, have a look at what's happening as far as, walking into some of those big shops in Dubai and just buying gold. It seems to be a fever pitch. You've got Costco in the States doing it. In Sydney, there are, the Bullion Company in Martin Place. You walk in there, I'm sure people are walking out with probably half-kilo bars of silver and gold, going down to safe deposit boxes. It's very much a part of our culture, and that won't, I don't think, wane anytime soon.
So, Peter, the sense that we're getting in from the markets is that this is less of a paper trade or a speculative trade and more of a physical trade. People really are acquiring it in physical, is it?
Absolutely. There's no doubting that. I mean, you've only got to look at what's happening across all of Asia, very much into India. And, there are paper traders out there. There's no shortage of those either, because people are prepared to ride a market up and looking for pullbacks and opportunities. They're conscious as far as fundamentals and the technicals. They're aware of seasonality demand. They're the three key drivers when you're looking at trading. Festivals, religious, all over the year. And then you're looking at what's happening as far as central bank policy, what's happening as far as inflation, and I think the US dollar coming off and so heavily off since the start of the year has really added momentum to it, Manisha.
Peter, that's about gold. And what's your sense on silver? Because $41 an ounce done, and we're looking at new 14-year highs onto this one as well. Are you looking at more gains? I mean, as you said, there would be short-term corrections that we will continue to see in all of these precious metals and commodities. But where are we ending by the end of this year?
It's got to be probably 45 and north of 45. It's too hard to go out on a limb, Manisha, with 4 months left. Anything's possible as far as price explosion to the upside. But I think 45's got to be a key handle for traders to be mindful of. And, you know, you're nearly there now. It's what, 41.50, 41.60 sort of number for futures. So, I think it's got the momentum to get there. We all understand from an industrial demand, we've spoken together, data centers and electric vehicles and electronics. So that's not ending anytime soon. So the overall picture, I think, is going to be one. First off, silver's probably got a larger percentage gain in the short term than gold. And I think many traders are very conscious of it. And, if you're a paper trader, you wouldn't like to be short at the moment.
A report from Swiss Asia says that gold is going to $8,000 to $12,000 an ounce by 2032. This is by far the most bullish call coming in for gold because remember, Bank of America has talked about $36.50 an ounce. Citi's put $4,000 an ounce as an upside. Goldman Sachs recently talked about $5,000 an ounce. But Swiss Asia says that gold is for longer term. Keep it in your portfolios and you could be looking at $8,000 to $12,000 an ounce by 2032. Well, remember, gold has given you 36% of returns in this year, and gold can surge higher because the US Fed rate cycle would start beginning very, very soon, and that is bullish for gold. Also supporting gold is the weak US jobs data, the housing numbers were not so great, and the credit card numbers also are very supportive for gold buying. And then the highest debt in ever is what the Western world seems to be facing at this point in time. So gold is your safe place to be. It also is about strong physical demand, even with the gold prices at all-time highs. Physical actually is trading at premium right now. And then you have had the strong central bank buying in the last 3 or 4 years with an expectation that there is more gold being added to reserve than dollar and US Treasuries is yet another reason that gold should be in your portfolio and in a big way.
China is looking to simplify procedures for cross-border trading in gold, reducing paperwork and speeding up imports. The PBOC continues adding to its official, under-declared gold bullion reserves, while investment demand for low-margin gold bullion bars and coins remains strong in China. The move to ease gold importation permit rules will, quote, enhance vitality and respond to external shocks by improving business environments at ports in China.
We talk a lot about this gold rally and gold hitting new record highs. What's the catalyst right now? Now, last year it seemed to be a lot of central bank buying, specifically from China, as they try to diversify away from the dollar. What's the latest tailwind? Because we just continue to see gold move higher.
Look, that hasn't changed. A lot of those tailwinds we saw last year continue. What we have this year adding on are U.S. and Western investor concerns about the twin deficits in the U.S. So you have the budget deficit and the trade deficit, which are ballooning. So you've had this addition of Western investors on top of central bank buying as well as Chinese retail buying.
All right. I also want to talk to you about, if you cover this, platinum as well. We were just doing an ETF segment before. One of the other ETFs, commodity-focused ETFs, seeing big inflows was the platinum ETF, the PPLT. Why are we seeing flows into platinum? What's all of a sudden the interest in platinum?
There's a lot of potential reasons why platinum could be going higher, but one is that just supply from South Africa is quite minimal. But I think what not a lot of people realize is, as well as palladium, Russia also produces platinum too, and so just given limited access to Russian supplies, but yet to be fully proven out. But we think demand in China is accelerating, possibly for a number of reasons. One could be jewelry buying, and the other could be potential investments into hydrogen infrastructure. Interesting thing with platinum is there's not a lot of easy ways to play it. So getting exposure through the physical, or there's a handful of South African listed stocks covered by some of my colleagues in the UK.
All right, as I'm sure you're very aware of, more than likely we're going to get a rate cut next week. We may be entering an easing cycle. How does that impact the gold rally that we've seen so far this year? And does that potentially spark an upside move in a different metal in your coverage universe? Perhaps copper, silver. Is there another metal that could benefit from this rate cut?
Yeah, great question. We get that all the time. So the one we'd usually point to would be silver. Silver is kind of viewed as gold's little cousin. It tends to outperform gold in these long stretch gold bull markets, and we are very constructive on the silver price as well.
And turning now to Indian silver market news this week, Manish Gupta is here to help.
Welcome back, and joining us on the show now is Avinash Gupta. He's Vice Chairman at the GJC and joins us live here. Avinash, hi, thank you so much for joining in. First of all, to your sense on silver, because we're trading at a new 14-year highs in the international markets. The time that we took $39 and $40 and $41 an ounce on the higher side as well, with expectations that silver will continue to outperform gold in the very near future. How are you looking at, one, the fundamentals, and is the retail demand continuing strong?
On fundamentals, I can say one thing: the fundamentals are very, very strong for silver, and it is not going to hamper because of all the tariff things and all, because every country is working on the renewable energy and the EVs, on which the major consumption on the industrial side is going to happen for silver. On the demand side, on the jewelry as well as the artifacts and utensils, in India is concerned, it is going strong, and with the price rise of silver, it is giving much important aspect to the consumers that this is the metal in which they should be invested in, as jewelry, as artifacts, as utensils also. So I think it is going great for silver this year, and it will continue till the end of the year, because the festivals have just started with Ganpati, and now this 15 days little bit slowness will be there because of the Shraddh Path, but it is going to be great. I'm looking at on a very positive note, Manisha.
All right. Mr. Gupta, would you have a sense on prices from here? Because we have had those forecasts for $42 and $43 and $45 and beyond.
Manisha ji, I have been always a positive guy on silver prices, and by the end of this year, I am looking at $45 minimum, and we may cross the all-time high of $50 by the end of this year. I am very positive on this. With the Goldman Sachs report coming in, that has given me much more confidence on both the metals, gold and silver. So I think silver should be doing very good.
Well, it's not just the Goldman Sachs report, Mr. Gupta. It's Bank of America, it is Citi. Almost everybody is talking about very high prices of gold going forward. Goldman Sachs just reiterating what everybody else is saying. But how are you looking at the Indian demand from here? Because at these higher prices, almost everybody is talked about on how the volumes could see a bit of a decline. Is the industry working with lower numbers in this quarter?
See, the domestic industry has started working on lowering the caratage and making the jewelry lighter, because the Indian consumer's pocket size we need to look at, and definitely Indian jewelry industry is working very strongly to align with the pocket-friendly consumer. And Indian consumer is very smart. Indian consumer knows that gold has given the lot of returns to them in the past also, and that is going to keep on giving that. So definitely we are seeing a robust market.
On the other side of this short break, more silver news as London's Metals Focus Managing Director Philip Newman was in India this week at CNBC TV 18 headquarters. You will not want to miss hearing his scorching hot silver takes on the other side of this short intro and week's price action wrap. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Yeah, and I think since we've launched the SD Bullion IRA program, we've even gotten more insight into this industry. Right. And you start to see like the email, the unorganization, and things make sense of why things take so long. When you use the traditional three, separate entity model, nobody's doing checks and balances with each other.
And like you said, there's horror stories now that that people are reaching out like, hey, the depository says 4 years ago they didn't get this inventory, and it's like this is crazy, guys. Like compared to our facility, everything, literally every inch of this facility is under camera.
I hope you enjoyed this short clip from my recent conversation with SD Bullion founder Dr. Tyler Wall. If you're interested in opening a gold or silver retirement account, then this video is a must-see. The insights and strategies that we reveal have helped SD Bullion customers save hundreds of thousands, if not millions of dollars inside their gold and silver retirement accounts. After $5 billion in transactions with more than 400,000 customers, I assure you, this video might be the most important thing you do for your gold and silver future. Visit ira.sdbullion.com/video today. There, you'll be able to gain full access to the entire interview, and you'll also be able to watch more short clips from our conversation. That's ira.sdbullion.com/video. I hope to see you there.
Both silver and gold traded higher on the week. The spot silver price closed at $42.11 an ounce bid, while the spot gold price ended this week trading at $3,642 an ounce bid price. The spot gold silver ratio turned down to close the week, and it is still at a stubbornly high level of 86. Now back to close out with another clip from India's Manisha Gupta from CNBC TV 18 this week, as she hosted both silver industry leaders from the Silver Institute and Metals Focus, respectively. All clips and article links will be backlinked in the show notes below if you want to take a deeper dive beyond these highlights. Let's get into it.
CEO at the Silver Institute. Michael, hi, thank you so much for joining in. Wishing that you were here in Bombay as well, but how are you?
I'm doing great. I wish I was there as well. It's great to see you, Manisha. Philip, good to see you as well.
Likewise.
Michael, while of course we've been talking about gold with Philip, but silver, I mean, that's another one. 14-year highs, not too far away from its all-time highs, and almost everybody seems to be believing that we could see an all-time high this year or next. How are you watching the prices?
Well, we're keeping a very close eye on it, and we think we're in the middle of a secular breakout with respect to silver. I mean, the rise this year alone of some 43% has been quite remarkable. It's being fueled by all those points you mentioned, but it's also being fueled by a focus on green energy across the globe. It's being focused on the investment side of the equation, especially with ETPs and in India with ETPs. So look, it's firing on all cylinders at the moment, and we're very bullish going forward.
You know, while of course gold has been gaining because of the safe haven demand, silver also in addition has the deficit, the industrial demand, and most people seem to believe that silver perhaps will outperform gold going forward. How are you looking at the way silver is doing? The physical buying, the investment buying, the ETF buying, as you mentioned, has been on the stronger side as well. Are you willing to put out a number, Michael, on where the silver could be this year, next year?
I will leave that up to Mr. Newman and some of the banking analysts to give a final number, but everything is pointing north. I can say that. Many investors are looking at the deficit. We're in the middle of our 5th consecutive year of a deficit. And while it may be a little bit smaller than in previous years, it's still a deficit market. Only recently, 2 weeks ago, the United States identified silver as a critical mineral, which means its importance to national energy, national strategic and defense applications have been identified by the U.S. government as a critical mineral. Many investors are looking at the deficit, but I think they're looking more long-term too. When you look at the metal, you look at the investment purposes of the metal, you're seeing strong ETP, a little weaker on the physical side, especially in the United States, but India is picking up, as Philip mentioned earlier, with respect to gold in Germany. Silver is picking up there as well with respect to bar and coin sales and demand. So we're quite bullish on the year, as I mentioned, and we're looking forward to continuing this trend, hopefully.
Philip, getting you in this conversation as well. And as Michael said, price is something that he'll let you talk about. So what is your sense? Where is the buying coming from? And what's your sense on prices?
Well, I think to add to what Michael was talking about from an investment standpoint, you look where ETFs are globally. India, yes, has been strong globally as well. And even though we're just below those record highs from a volume standpoint, in value terms, we are at record highs in terms of ETF positioning. So I think that's very encouraging. And so from a price, we do think prices can strengthen from where they are. And we think that will continue into 2026 as well. And I think what's really positive from a price standpoint is the fact that, when we did break out just through 30, get into the mid-30s, that it held those levels. So those mid-30s became a very credible point. And even as we get into the very high 30s into the 40, again, it seems to have held that. So I think that's very encouraging looking ahead as well.
Philip, how would you read those reports which suggest that silver could go to 50 and 70 and 80 and triple digit in the coming years?
I think $50 is quite feasible. If you're looking at, very high threes or potentially even gold beginning with a 4, we always think that silver, when gold prices are doing well, it should outperform to the upside. We haven't seen that just yet. So I think if, gold does get to those points, you could see some positive spillovers into silver. Perhaps some investors saying, what, gold's done very well. It's time now for silver. And so if that money does flow in, given it is a smaller market from a value standpoint, then 50 is feasible. I'm not quite sure what year that would be, but I think that is, potentially on the cards.
Michael, how would you look at the demand trends going forward from here? I mean, that's a question that I put to Philip as well in sense of gold. And yes, this seems like a changing market. And if the prices do balloon up further from here, would you say that that would really change it strategically on how silver is bought as well as investment?
As an investment, absolutely. I do agree with you. When you look at the overall demand side and just taking industrial demand, it may not post another record year, but it's going to be darn close to the number of ounces, 680 million ounces of industrial demand in 2024. So we're looking at China, we're looking at India, we're looking at the United States. We're seeing silver being incorporated more and more into data centers, into AI, of course, into solar panels, electric vehicles. The electrification of everything is leading to greater demand for silver. And that's something that's just not going to go away. We're not going to return, in my opinion, to a fossil fuel-based economy on a global scale. So silver has a critical role to play going forward, and it will lead to greater demand for the metal as the years go on.
So while, Michael, we are into a 5th year of deficit, how longer do you think that we will see this deficit of a situation continue into 26, 27 or beyond?
That's very possible. Look, there are no new silver mining projects in the pipeline at a large scale. We may have a small increase in mine supply this year. Some smaller projects have come online. But quite frankly, until the mining side of the equation catches up and the demand side continues to move forward, we could be in a deficit for several years to come.
Philip, comment on the gold and silver ratio. I mean, that seems stabilizing now.
Well, we're still in, I guess, a relatively high 80s. So yes, we do seem to be stabilizing at that point. And I think it will remain broadly around there, at least for the next few months. So if gold does strengthen, silver will run with that, I would suggest to you. But I think as we move into next year, and perhaps even for 2027, to Michael's point about the deficits, we do feel that they will start to have an impact as well. And of course, the other thing I think is really important, looking about how much silver is held in London and how much is freely available, that's not allocated against the ETF, that is exceptionally low. We've only got about 20% there. So that's something also that we are watching. So that's something that could have an impact this year or next year. And so that could therefore bring that ratio down as well.
I have a final question for both of you, and this really is demand related, because from where the prices are, that really seems to be the next thing. A lot of people have bought and are absolutely happy for that, grateful as well. But some people have not bought and do not believe that they can now get into these markets. So what is the sense that you get, Philip, on gold first? Where are we standing in sense of buyers here?
Again, I think for buyers that if we do see some liquidation, they will be coming into the market. But even equally, if we start to run up, then I think they would come in fairly quickly before prices do move higher.
And what's your sense, Michael? You think people will start moving into silver now, given the fact that it's not too far away from all-time highs, but people have missed buying somewhere?
I think they will. When you look at the global economy, when you look at the wars and what's happening across the globe, the tariff situation, Philip spoke earlier about the potential for a rate cut in the United States. It's that in particular is encouraging for silver. But there's a lot of economic and geopolitical uncertainty, which is leading people to get where they are right now with silver. But there's a lot more room to run. And I think that other investors who may have been on the sidelines will jump into the silver market.
All right, a lot more room to run for gold and silver, both on the higher side here. So even as we are trading at all-time highs for gold and silver in the Indian markets and multi-year highs for silver and all-time highs for gold in the international markets, well, there is still more upside left given the kind of global scenario that we are dealing with right now. If you're on sidelines, perhaps you'll get a chance to buy, but much higher rates from here is something that markets are talking about. Michael, Philip, thank you so much for joining in. You guys are a team and it's always amazing, very interesting to talk to both of you. Thank you for your time. Appreciate it.
Be sure to take advantage of 90% silver at spot deals, low margin platinum and gold bullion coin sales this weekend at SD Bullion while supplies last. That will be all for this week's SD Bullion Market Update. And as always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.